Elon's secret production results in a 10-cent lower earnings than expected, despite revenue being greater than expected, dropping the stock price of Tesla. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. Your support is greatly appreciated and makes all the difference in the success and viability of our channel and is greatly appreciated. So today's talk is a bit unusual in that sort of usually we try to focus on positive Tesla stuff. And in this case, with earnings being down and the stock price being down, one could not say that it is a very positive circumstance. So it's always difficult because viewers will go on the attack from that angle. So what we wanted to therefore cover today is just that fact. The fact that, hey, Tesla didn't do as well as we expected, and therefore we're in the case where we are now you didn't do as well as expected, therefore stock price is down slightly. One of the reasons I've been slow in executing this show today, despite earnings yesterday, was that sometimes it takes time to actually see more of what's happening and understand before moving. What I mean by that in this case is that there are a variety of different types of investors. There's one group of investors like hedge funds that as soon as they see the number on earnings, they make a move quickly and then they're in or out of the stock. There's another type of investor that's pretty much 60% of the ownership, call it 70% of Tesla's ownership now. And those folks sort of approach things a little bit differently. And what I mean by that is that they will actually engage in a process where they're trying to look at operating fundamentals to determine where the company is going and why. So one of the problems that we identify, so in this case, what that means then is that at the 3-day point, once the analysts have a chance to weigh in, I believe that the stock price is at a nice bargain right now and will rise again. The main reason for that is that there are a number of operating fundamentals that Tesla is actually doing very well at, which resulted in the higher than expected revenue number. The issue that we've been highlighting probably once or twice a month is that Tesla has a challenge right now because they have a number of initiatives, be it the German factory completion, Austin factory completion, that new battery plant in Fremont being completed. All those are draining cash. So the problem you run into is they're not in jeopardy of running out of money because they have all the recent cash they've raised as part of the S&P process. But they do have a problem, which is, all of those activities, the way they hit the balance sheet is kind of bad news because it lowers earnings. And in particular, the challenge is you have all these ongoing activities that don't generate any revenue. So now we have an interesting problem, which is, wait a second, if you aren't generating any revenue and you're doing a bunch of work, that's when you have a decline in earnings, and therefore it can hit the stock. So usually if you have a problem with meeting your earnings number and it's a legitimate sort of fundamental problem that might cause the company to do badly, that's when the stock price would fall and stay down. If you have a situation like we have now, which is they're really investing heavily in growth, and that growth is leading the company to have a better stock price, et cetera, that's what we call good news, good use of cash, et cetera. And with that in mind, one of the issues with the battery factory in Fremont is that we did see that Elon was involved in doing that plant, and I think he revealed way more than he should have in the announcement he did. But what also is going on is that as the world got a feel for what he was doing with the money, there could be this argument like, we don't like you doing that because we want you to make more money. But on the other hand, the fact that you're doing that sets up growth for the company that's very profitable, because once you start building your own batteries, your margin actually is better than it would be if in fact those batteries were being built by an outside entity, be it Panasonic or other folks. So don't be surprised soon, because of where Tesla's going and how they have to be chased by the big OEMs, to see a GM or a Daimler or a VW start to get rid of the partner and maybe build their own batteries in order to try to stay within range of the profit margin necessary to be competitive with Tesla as time goes forward. So yes, we did have a problem that popped up. The big number in my mind for this whole thing was that we went from a 22.5% profit margin on Tesla down to a 19.2, and that's worrying because the question is, they're starting to lower prices in China. Have they done a good job of setting it up properly? So a big part of why I was reticent to say stuff right away is that the obvious numbers of the 10.7 billion in profit with the 80 cents per share, I think all those statistics were quite obvious. The next question that pops up is, now wait a second, we know what the general numbers are, what are the basis for those numbers and how does that set up the company for the future? And so I chose my title today, Elon's secret production tanks the stock, because one of the accounting questions we had raised was China had started producing Model Ys in Q4, but wasn't allowed to sell them until Q1 of 2021. Now, what happens with all those vehicles that are produced and you already have customers for them, but you're not allowed to sell them, but you also want to produce them in Q4 because it increases the amount of vehicles that will be produced in Q1 of 2021? All great questions, and the answer is this slight loss that we just discussed. So what this leaves us with then is we're in an interesting, strange position. The strange position is Elon slash Tesla looks kind of bad because they missed their earnings number, but they look kind of good because the revenue number was $400 million greater than expected. And so I really feel like what's going to happen, and it's starting to happen already with the stock, is there are a number of investors that will start jumping back in. The other variable on the decline of the stock price yesterday, there was a lot of hedge funds that had to sell good stocks in order to scare up cash, given the short squeeze they were experiencing relative to some of the short positions on AMC, as well as the gaming stock. And so it looks like the market has sort of returned to sanity. Microsoft is up. I guess Apple's down a little bit, even though they had a great quarter. And we're starting to see the great companies start to return. Even Amazon is gaining strength ahead of earnings in the beginning of next week. So in general, I just think I kind of didn't want to make this show because, frankly, I think the company is staged well for really big growth this year. I think there's a lot of good news that's beyond the obvious. And, even the bad thing that screwed up the stock, which is Chinese production that was done but not paid for, in my mind, stuff like that is great because it's going to help make it a big quarter for Q1. So I have to admit, I'm kind of having difficulty right now with where we are with the stock, given that the current numbers were not great but decent. There's a good reason why we were light on our profitability and the way this year is looking. The other thing I'm confused by in terms of Elon's secrets is Elon, there are probably two other points. Number one, the Semi. Elon announced that, we're planning on production for the Semi this year. The problem is the Semi takes 5 battery packs, and we're planning on doing it this year, but we're short on battery packs. And the answer to that is the new battery packs, in theory, won't be ready until next year. So this feels like the usual process with the Semi of Elon saying, let's start full production like he did last year. And we know he doesn't have a factory, so he can't start full production. That's what the deal was last year. Now we're at this point, and he says, let's start full production right now. But oh, by the way, we actually don't have enough batteries to do it. So I feel like from Elon speak, what this means is that the Semi gets pushed back another year for a good reason, which is if you ain't got no batteries, it's kind of hard to do it. So the next sort of question mark that pops up is wait a second, Elon also was discussing the fact that we're going to see 50% growth in revenue each year. Now, I'm confused by this, frankly. And the reason I'm confused is that Fremont, without COVID slowdowns, is capable of 500,000 vehicles plus a year. Particularly wise, I think, are the biggest sellers right now with 3 second and the S's and X's. The other issue, though, is China, from what we're understanding, is capable of between 500,000 and 1 million cars a year. So if you did 500,000 cars this past year, China has a backed up supply demand for Model Ys at the lowest price. I think it's UPOD or under promise, over deliver that's going on, meaning that I think Tesla will do 1 million vehicles this year, 500K from China, 500K from Fremont. And that's 100% growth in my mind, unless you guys can come up with math I have not thought of. I'm open to that. And so what we're looking for then is for Tesla to have a very strong year. And I would not underestimate the Chinese to actually push that number and be somewhere in that 600,000 to 700,000 vehicles. And the reason is we've already gotten a jump start of about 40K vehicles prior to the start of January 1st. And so as we go into standard production, we should be able to, do that quarterly run of 125,000 vehicles, maybe 150. But the way things would be affected in terms of controlling competition, et cetera, of them pushing out a huge number here, I think would be good for the company. So I really think we're in a 1 million year vehicle year for Tesla because of strong Chinese demand. I also think that if the Chinese don't want those cars, they can go to other parts of the world, especially to Europe, and those lower prices will really suck in the customers, sucking them away from others. A sidebar note I'm fascinated by with this whole thing is that Elon articulated that there's kind of a shortage of batteries, and he's buying from both LG, Cattle, and he's building his own, and he's got Panasonic's coming, that whole structure. One of the interesting questions is coming up right now is Elon is experiencing so much shortage of batteries. What is everybody else experiencing? Because they really don't have the demand yet for all their vehicles. And once they start getting some demand, how are they going to get the battery supplies to service the vehicles? Interesting unknown, but one of the answers is that Cattle is expanding production at their home facilities in Shenzhen. So this is one way that I guess that's going to be answered, and we'll see more of this. So when it comes to the whole earnings piece, I thought the numbers were actually really good. And where there was a blip, there's a really good reason for it. So therefore, in my mind, for the setup of the 3-day rule associated with how those earnings and revenues are going to be responded to by the analysts, I think Tesla could end up higher than it was prior to earnings, because the story that goes with it, particularly for forward growth, is excellent. And so I don't think what I just shared is a fit for what the stock price is doing, because it was down, still down, as I'm doing this show, but I really feel like that's where we're headed with this whole thing, and I just think it's a positive circumstance. The other problem right now that people are having is there's a discussion of a stock market crash. A lot of the crashes are often driven by people saying, hey, the economy is doing things in a way that won't service the success of this company. And the thing with Tesla is that with where the US is going on EV credits, with China having EV credits and forcefully trying to get more electric vehicles on the road, Europe has a lot of fines right now if you don't get your electric fleet going versus having a bunch of gas guzzling and polluting SUVs. So there are all these variables that are to Tesla's favor. And then I actually sent out a piece yesterday you might want to take a look at. The Harvard Business Review just came out with a story regarding how impactful Tesla's supercharging network is. It indicated that there are a lot of companies that are working hard to compete with Tesla with certain mileage range for the vehicles they're producing. But without that supercharger network, there's a way in which a lot of consumers feel somewhat constricted in terms of driving their vehicles, and therefore do not want to buy from brands that don't have a dedicated way for them to charge their vehicles with high quality power. So I just think that, this is Tesla's game to lose. And I just think that, there's a lot of good news that's sitting in there. And I just think it takes vision to go beyond the obvious, what we're seeing of the initial disappointment of that number and sort of the stock price dip, and embrace the fact that structurally, I think the company is in great position right now to win. So that's what I think is going to occur. At any rate, I want to remind you to take time to like and subscribe. Also hit the bell icon so you get the show update news as soon as it gets out there. I'd highly encourage you to consider buying right now, because I just think that we're in a great position for you to make some good money off of the willingness of some others to sort of jump ship when everything actually looks really good for Tesla. So we want to also remind you of our health tips. Don't forget your 25 leg lifts per day. Strengthens your quad muscles, avoiding knee issues. Also wanted to encourage you to limit your fried foods to once a week. Also wanted to encourage you to consider a 3-5 or one of the other fasting diets as the way to health both mentally and physically. Also wanted to suggest trying to maintain your sleep schedule for a couple of weeks at the same sleep and wake times, because it gets you into a circadian rhythm, and that rhythm will facilitate better health, comfort, etc. And finally, from our doc in Louisville, upper respiratory cancer doc, do not forget to not go to bed within 4 hours of eating, ideally minimum 2 hours, and this will eliminate the chance that you end up with acid reflux or potentially the stomach acids digesting you. At any rate, we look forward to your constructive criticism on our discussion. We actually have another show I'm working on, won't see it today, probably tomorrow, and we're really looking at what's going on with GameStop and AMC, and is this a trend we're going to start seeing more of going forward? This is Greg for Teslafaninsight. Tschüss, German, au revoir, French, Lehithro, Hebrew, Choda, Hafez, Farsi, Stadazriche, hello in Russia, Ni hao ma, hello in Chinese, Konbanwa, Japanese, good day, our friends in Australia, hey do, Swedish, and namaste, Hindi, and in Jamaica we say, Nuff respect, walk good man. Thanks for joining us, have a great day, and bye for now.